All right, welcome back to the report. I'm joined again by Director of Communications and Marketing at Gray Capital, producer of the Gray Report, Dr. Matt Bosnagel. Matt, how are we doing today?
Hey, pretty good. It's been exciting. I was sharing so much with you yesterday because you're off in looks like half a continent away, or maybe a couple of continents away.
Right on the edge.
I don't
Yeah,
think we're doing
I'm
as
reporting.
exciting things as you. Yeah.
I don't know. There's a lot of good stuff going on at Gray Capital back in Indy. Yeah, I am reporting on location. Right on the footsteps of empires in Istanbul, right on the Bosphorus, doing some observation of the sea lanes, trying to see where the global economy is headed. Just kidding. I am on family vacation, but I had to make time to do another episode of the Gray Report because there's so much going on in the market. And Matt, you're keeping us on point. All right, look, I just want to jump into this article from BizNow. It's on, it's another iteration and update from Adam Neumann's company Flow, which, we remember Adam Neumann, former CEO of WeWork. You may have seen the movie to be familiar, read a bunch of articles, huge business that was in the co-working space, a little bit of an implosion, massive valuation fueled by SoftBank. And many are questioning right now, are we seeing a similar tale, with a huge sales pitch about, community and buying these nice brand new A-class apartments, highly amenitizing them, again, creating the types of vibes for millennials and Gen Zs, renters where apparently they can't find anywhere else. And we've talked about this before, but as Matt, you noted in the show notes, and we've discussed on previous episodes, at one point, it was just a website that said Flow, and we weren't really sure, what the product was going to be. But now that they're a few years in, I know they've bought a couple assets. I think higher interest rates and the challenges of the multifamily market probably subdued some of the growth. But looks like they're raising real money here, Matt, that they could be a serious player. Bring us up to speed. What's going on with Flow?
So there's no monetary value that has yet been ascribed to it, but there's been this new announcement from Marc Andreesen that they are doubling down on Flow, is the words that he uses in his announcement, and it's basically a restatement of confidence. The initial statement of confidence was in 2022, talking about how the nation has a housing crisis. And I like the way that they characterize this. Again, this is in August of 2022, the initial $350 million investment from Andreessen Horowitz. And he said, oh man, look at what happens when you're renting an apartment. It's a soulless experience. Do you even meet your neighbors? Are you proud to bring your friends and family there? I mean, come on, it is just a horrible experience here renting an apartment. And then to cut to now, people still need homes. They still need things, and that's why they're doubling down on Flow. So I don't know if they are investing $700 million, because that's what double is in my opinion, or if they're just kind of giving an update and giving another vote of confidence. But they're saying that Flow's buildings crush market benchmarks, higher revenue, better profits, a brand unlike anything in real estate, and their technology that reimagines what's possible for owners, operators, investors, and residents. So this is a big apartment syndication firm is what I take it, and it looks like this. So I have here the Flow website that's up, and it is heavy on the kind of lifestyle, heavy on young people, and I just kind of ran this by our property management, and they were like, yeah, well, they're kind of leaving out older renters, maybe maybe they're leaving out a clientele, but they have a lot of promises, and I increasingly, as I went through their website, I'm thinking about how much it is to kind of like run all of this stuff, all the spaces that they're saying that they have, and to make sure that renters are happy, and how to do that in a way that makes financial sense. So that was my immediate take about Flow was, yes, highly amenitized, but are these amenities? Is everyone gonna want to go kayaking every weekend? I don't know. I don't think so.
Well, it doesn't matter though, right? But that doesn't matter. I mean, you could say that about any apartment amenity, right? I mean, the gym, the pool, the aqua lounge, the golf simulator. None of these things are used daily or weekly by the residents. And so often an amenity is supposed to provide, the idea that, you could use it.
Yeah.
It's the hope. It's the idea of, imagine yourself living in this environment. We talk about amenities on the acquisition side often, sometimes as, pure leasing tools. Like no one may actually use this, but let's have it because they might like the idea of using it. And if they do use it, that's great. Get a great experience. Hopefully that leads to higher rates of retention. It's the same reason why we're seeing in markets that can do this, don't get too cold in the winter, leaving pools not necessarily open, but not necessarily closing them, covering them up either. Having a really nice looking pool for a tour, even though it's not actually open to swim in, but you want to have the aesthetics and give the impression that, look, you're going to be, when summer comes around, you're going to be swimming and having a good time.
Mm-hmm.
One question that comes to, so they're just kind of taking that to an extreme. I mean, and the question that I have is two, one, have $350 million, that would buy a lot of apartments. That would buy, close to, over 10 apartment buildings, if that's all equity, depending on if it was, equity or debt. I'm assuming it was equity injection. Certainly, they were probably going to take a lot of that money to, put into the corporate entity. I'm assuming just that's how, these more venture capitalists, startups, the types of companies operate rather than traditional real estate company. But that's the question: is this more of a traditional real estate company, or is it something different? And I'm seeing nothing that leads me to believe that it's anything other than a traditional real estate company. They just have really high-end amenities, offer experiences, which is on the close to the leading edge, but they're certainly not the only ones doing it by far. I mean, we have a property in Indianapolis, Matt, that we're offering kayaks and boat tours and all kinds of things, and we're looking to add things all the time. And there's a lot of folks that are working in multifamily to add additional amenities, concierge type amenities and services to A-class properties. Does everyone have a meditation room or a practice room? No. I bet not every flow, a property does either. I'm sure they're highlighting a few specific examples. So it boggles my mind. It can be a good idea. I mean, if you're in a market with that type of demand, I don't think it matters necessarily that you're not going to capture like the empty nesters, older demographic, and they certainly make up the second largest percentage of renters. But the highest percentage of renters, clearly are going to be in your early 20s to your mid 30s. That age group is widening somewhat, but that's your core renting demographic, assuming that they can afford to live in a place like this. But again, if you're in a place like Miami, Fort Lauderdale, or in Saudi Arabia, as I saw one of those locations,
Riyadh, Saudi Arabia,
you might have that young professional with a lot of money that isn't looking to buy. They're looking for a little bit more of a transient lifestyle, and isn't everyone looking for community? So I'd say it's not a bad concept. We've worked on similar things at Gray Residential and Gray Capital. It's just it has so much hype in the way that it's discussed as a novel idea, and it certainly looks sexy, but I don't think it's novel. And I'm really curious on the valuations.
Yeah.
And if they are overpaying for some of these assets, assuming they'll be able to achieve much higher rent premiums than market because they have, some special brand or some special sauce. And perhaps that could be the case. But I mean, when I'm looking at articles, I think they just sold one of their properties that they bought in Nashville at a loss. So, maybe that's just market timing. But, again, and I'd have to ask, why would they sell necessarily so relatively early on into this venture at a loss, and instead of holding on for a longer period?
Yeah, I think that I think that's totally true, and it made me think about something that was rattling around in the back of my head as I was thinking about flow this week. Was this idea that venture capital and Silicon Valley, they will often try to kind of dominate the space and they will maybe drive down the prices so that think about like Uber, they were maybe operating at a loss for a little while, and in order to make the price and build up that customer base. And same with a million of these social media companies, they had so much runway that they could build that base, and then by the time that they were like ready to make money and ready to kind of turn on the money machine and charge people and whatever, they had a dominant position in the market. But I don't know if that's going to be attainable in the apartment market. It's a lot bigger, and the pressures to make money, and to stay afloat kind of, are a lot more if you're maintaining a building versus if you're maintaining code. However, yes, there's probably a lot of nightmares if you're thinking about like a Twitter, Facebook, or TikTok. There's a lot of things that could go wrong in there, but just as much could go wrong in where you're living. And I just wanted to note here, this is in the paragraph that Marc Andreesen he wrote this recent note, and in his most recent note, he talks about how they're buying and developing real estate made more valuable by the Flow platform. In South Florida alone, Flow and its partners just acquired projects for over 3,000 apartments, allowing it to create entire neighborhoods built on the Flow vision. I think that this is a Silicon Valley idealism, kind of like, we're going to own the entire space. We are going to dominate. This whole neighborhood is going to be Flow, and we're going to have this kind of control over it in the same way that we control, the remote, the automatic cars or the Uber in an area. There's that kind of,
and it just hits a little bit of hubris though. I mean, and again, that paragraph of where the value is going to be driven by the Flow platform. Well, maybe, but you can only really extract that value and you sell it to another operator. And can another operator make sense of that operating model? Can they sustain that, and can Flow actually sustain it? Are they actually cash flowing, or do they not care about cash flow and they think they're going to get some huge exit? And that's the difference when we're talking about when we're talking about like real estate compared to like a startup or a venture capital investment. In the venture capital investment, the idea is that it's going to 100x, it's going to like 1,000x, because you're going to scale it across this large market. An individual property, I mean, it's, linear growth on net operating income, and then you can make a pop by a value increase. When you sell it, you take the net operating income, you divide it by the market cap rate. And you can get a nice premium and you can make some money doing it, but you're not, taking something in 100xing or 1,000xing or something. You're taking a piece of technology that a billion people across the world can use. You're buying a building that a very limited amount of people can use, and you're only targeting a subset of the population. Only a certain amount of people are going to be in the highest income demographic that are renters are going to be able to afford this. Mm-hmm. Now, fortunately for Flow, though, I mean, there is a lot of folks that can no longer afford to buy a home. They're making good money. They don't want to buy something. So, I mean, there's definitely is a market for this. But, again, the whole idea that they're going to get this really strong valuation. And if you go back to that last page, that the paragraph, paragraph below that, it was talking about, they're working on these other ideas such as, democratizing real estate, using the blockchain. I mean, that's just, if that's not the red flag, or it's a red flag, it's a red herring, it's a distraction, to say that we're going to create this extreme value to do something different. And they're not the first ones that have tried to do this. And I've read other reporting that it's this kind of concept of having, the renters get some sort of ownership. Again, it's a really interesting concept, but it really doesn't pencil out that much. Renters aren't necessarily that interested in it. And again, if you're giving ownership over to renters, you're diluting value to the actual other owners of the asset itself. And it sounds like a lot of buzzwords, a lot of hype to make it have a blended tech component to get maybe a higher valuation. But again, good luck selling that to someone and telling them here's your democratized blockchain cap table of renters. Good luck. Or does that cap table extend on? It's a little confusing. I think it's a lot of buzz, but the concept of providing a highly monetized space to, wanting millennials, Gen Z, that's not crazy, but given a crazy valuation is.
Yeah, no, I totally agree. I think that part with the blockchain, you called it a red herring, a red flag. I think for some reason, for some people, I think it's a green flag. I think that is the special sauce that gets people jazzed, and that was present in the seeds of this idea was present in the 2022 note that he said when he's talking about how you can pay rent for decades and still own zero equity. This was born in the kind of waning period of maybe NFTs and crypto, and like right before, I think it was actually like a month later that ChatGPT launched, or like the popular iteration of ChatGPT launched in 2022. But I think that crypto is a big part of the conceptual underpinning that gets someone like Marc Andreesen excited. And I only say this, and maybe it's a little bit of literary analysis, but because this paragraph where he talks about finding ways on blockchain to democratize real estate, and then he spends the next one like he's more like emotional about this blockchain idea and equity than he is about a lot of other ones, because he's talking about a lot of other ideas that he writes about. He says, when people own stakes in their communities, they invest and they live, they build relationships, they create the bonds that make places feel like home. This matters enormously in a world pulling us towards isolation and screens. So I think he's really invested in this idea of, I think specifically crypto. They're going to slot you in with like a flow bucks. You're going to rent. I think that this is what they're working on, quote unquote. You're going to rent, and for every $1,000 of rent, you'll get 100 flow bucks. And I don't know what you're going to spend those flow bucks are, but those are yours. You have them. Those equity. That's real money there. You got your flow bucks. You maybe can get a Snicker bar at the commissary, but I don't know. I don't know.
Oh, they won't have Snicker bars, Matt. They're going to have some organic granola bar of sorts.
Yeah, no, that's true. I think that they haven't figured out a way to turn that idea of crypto into something that actually people want. I don't know what they want. I'm trying to feed them Snicker bars when they're probably they're going to want some kind of organic thing. But I don't think they necessarily want Flowbucks either.
What problem? I mean, they said
exactly.
The problem is that that people don't care about their communities if they don't own stakes in those communities. Well, again, apartments by their nature are somewhat transitory. I mean, typically you're going to see 50% of that apartment community turnover in a given year. On a high end, maybe 60, but 70, but then it's going to revert down. Some years you might even see 30 or 40%. So you're not going to have a population that's necessarily going to live there for a long time. I mean, some people do. I mean, we have residents that have lived in our communities for 10, 15, even 20 years. But that's very, very rare. What problem are we solving for? Is it basically like a rewards like program, like you're basically saying, which, again, this is just a fancier way to have like a punch card to punch it and you can trade it in for a free, yoga session.
Well, I think that's a good point. I think what problem is it solving? But I also looked at it in this way, like, what is their real contribution? What is their innovation here? And I was kind of beating around the bush here and talking about it, and you kind of were mentioning too. A lot of this is what apartment syndicators, apartment operators, property managers are already doing. It may be amped up in a way, but we have been quietly innovating for a long time. And I think that this carries the assumption that all of apartments are really crappy. No one wants to live there. No one has done anything to meaningfully improve the experience of renting apartments or operating apartments. There's no apps there. No one uses technology when they're in the multifamily space. And we're going to come in here. It will be like sitting at an empty table and eating our fill, because we are going to run laps around these people and no one's going to be there doing the same thing. When in reality, again, we have been quietly innovated. I said this to Katrina as I left yesterday. I was like, I'll be here tomorrow, quietly innovating. We may not be as loud or have the hype and branding of Flow, but we are doing the same work that they're doing. They just kind of assumed that we weren't. And I can point you to probably a half dozen National Apartment Association seminars on a sense of ownership and building a sense of community. Like, this is stuff that we work on. This is stuff that property managers are thinking about day in and day out. And to assume that it's not is is a little bit of hubris, I think, like you said, but it's also like a really expensive mistake. So I wonder if they're going to, maybe they will be able to float for a little while, or to flow for a little while. But
Flow to flow, yeah.
And this is what I was thinking too, man.
Flow.
That flow is not, it ain't cash flow. I don't think that's the flow they're talking about. But I singled out Katrina, who is the head of property management at Gray Capital Gray Residential, and I looked and I asked her, like, okay, what do you think about this? Are they doing anything different? And she said, well, the design is really nice. This practice room, this meditation room, Pilates room, it looks really cool, but it's not necessarily any different. It's just like an upscale version of what we do, what similar apartments do. I like how the pool is described as arguably one of the better rooftop pools in South Florida. But that aside, a lot of this stuff is extra. It's got a Pilates room, a meditation room, a practice room, and a fitness center all in one. And it's got and all these other amenities. There's a lobby cafe and bar, Flow social lounge, a well-being cafe, a game room, a Flow food truck, lobby cafe and bar. Already flipped around there. Podcast room, private offices, co-working spaces, and this app. So I want to get to that app in just a second. But all of these things are you can have that in your apartment. That's not and there exists podcast rooms in apartments. I'm pretty sure we've got a little podcast room in one of our properties. So this is not revolutionary. It's just maybe a bunch of stuff all in one place. And the biggest question I have looking through all of this stuff, and maybe I have got here all of these events, how are they going to pull this off? And does it work? Are people going to all these dang kayaking events or whatever it is?
But again, it's not necessarily. Community events aren't a new thing. It's a great tool that we do at our communities, and a ton of communities do community events. It's a great thing to do. It's low cost. Residents absolutely love it. I don't know if they've got like a name brand DJ or whatever to make theirs like very unique. But again, where I don't think they're wrong, and to play not even the other side, but I think highlighting just the facts. The average property manager apartment community isn't that great. And I think you and I are coming from a little bit of a different perspective, because we talk all the time about how property management can be different, and the experiences that renters are having, and trying to improve those as much as possible. We're actively living and breathing this stuff, and we're working on it, as other firms are too. We're not the only ones. And so for us, it's like this is obvious, but we also hear, me and Katrina and other folks say all the time that, your average property manager really is not always doing those things. Some are playing catch up right now.
Yeah.
But the average renting experience isn't that great. So they're not wrong when they say that. They're just not correct when they say, they're the only ones that have thought about doing a better job, and they're coming in from the outside, and the architecture looks great. The design is beautiful. Give them that. Yeah, man, CapEx. I'd love to see what their sources and uses are. I'd love to see their CapEx budget. None of this is free. And how much rent will it be willing to pay? Because ultimately you do have to cash flow. Ultimately, like, if they want to, and we've said this before in the Gray Report, this is like not a passive income. This is a marginal income industry, and you've got to keep the lights on. And I keep thinking of the Wellbeing Cafe, game room, Flow social lounge, podcast room, and conference room. What if they sit empty all day? And and surely, like, at some point, they do sit empty most of the day. And so at some point you have to think, and correct me if I'm wrong, I think this happened in a lot of WeWork places, is eventually the kombucha on tap, that kind of went away, because the people that were paying for the leases would rather pay a little bit less and get something a little more efficient than have all these amenities that they just don't use. So if you're paying for amenities that people don't use for the appearance and the kind of branding, I don't know if that's a really if people are willing to pay the rent premium for that. That's my only kind of comment there. Is like, people have tried this before, but
but a lot of times people just don't show up. Maybe they do in Miami or Riyadh. But okay.
No, I'm sure there is demand in those markets. I imagine what their exit plan most likely is that they assemble a large enough portfolio and they go to UPREIT and form a REIT, real estate investment trust, where they can access the public markets and use that hype to sell to retail investors, and investors across the world. I mean, to me, that makes the most sense, because then, they still have to be able to distribute, their dividends if they create any dividends, but, possibly less scrutiny than the structure of, like a private placement or fund structure. That makes the most sense to me. That would be my play if it's all hype, again, taking this on the road show. People are already believing Adam Neumann, again, to do something that is seemingly worth more than everyone else think it should be. But there are people out there that believe him.
The other thing that I thought about Flow as maybe a potential contribution. So in addition to the idea of the blockchain, so we've just talked about like the amenities and stuff. That's kind of what people have done. I can wrap my head around that. But also it's like, yeah, we're doing this every day, nothing new. Maybe potentially this idea of so this is a screen I have right now. It says own seamlessly in Flow. So it looks like you can buy a unit in the Flow system, and they have an app here, and you can kind of manage the property, do the property management, and do the marketing for that unit within this ecosystem of Flow. And there's an app that kind of connects that. It's really slick, and I'm sure that they executed on that app really well because of the Andreessen Horowitz connections in Silicon Valley. And sure, WeWork has a lot of talent that Adam Neumann drew from the previous talent at WeWork. I'm sure they nailed the app. But this idea that you can maybe own a unit and maybe rent it for shorter term rentals rather than like just a year, I think that's potentially kind of interesting. So I'll have to see how that actually looks, because I don't have the specifics here. But at least that stood out to me as being different. Other than that, though, sorry.
Oh, no, you're good. I'm just looking at some of their listings right now. I mean, it doesn't necessarily look like the rents are. I mean, the studios for 1,700. It's only 356 square feet. And that is in Fort Lauderdale. I mean, it's expensive, but that might be what a studio goes for in Fort Lauderdale. I'd have to just cross-reference on CoStar. They also are offering, furnished apartments for $386 a month. For a 2-bedroom, and this is in Fort Lauderdale. But what's interesting is, they don't really the apartments don't have names. They're just called Flow, I guess. And you can get information on certain units, but it's not like the property itself has a website. It's just, Flow has different locations, which is, a little bit different. A lot of groups have tried this, idea of, branding. Branding across several communities, and a lot of groups attempt to do it. Hasn't been a lot of evidence for brand loyalty. Yeah.
How about this? They say 21 perfect matches. When you pull up the rents, it's like, oh wow, okay, that's just a little bit of marketing. I thought that was funny. At the end, I kind of come away with the idea of Flow as a multifamily company. That's kind of probably the core thing. I don't know if he's trying to make it into kind of an everything app or anything. I don't think that he is that the aspirations are as wide reaching as they were when he was at WeWork and he wanted everything, the branding to kind of expand beyond the limits, but who knows? I keep thinking of the timing of this extra investment, and it's like, well, it started in 2022 when home prices were high, when apartment prices were high, and then that was almost
and rent growth was high.
And rent growth was high, and that was almost like pretty much the peak of the market. 2023 and 2024, there were very significant valuation decreases for apartments. Well, it's no surprise we didn't hear much from Flow, and now that arguably there's a sense that multifamily has bottomed and is on the way up, now we're suddenly seeing Marc Andreesen saying, "Hey guys, flow, let's get this moving. This is a perfect time to invest." And so that's what I wonder, if they're positioning themselves just to be another company. I want to bring up there's a quote from New York Magazine that summarizes this perfectly. It says, "While no one I spoke with expected Flow to do anything revolutionary, the developer pointed out that Neumann, I don't know, might very well pull a Compass, which is a commercial real estate brokerage, raise tons of capital by promising revolution and cutting edge tech. And by the time it's clear that the revolutionary stuff isn't going to pan out, it has become a huge, albeit largely traditional, player in the industry." I think that could happen. He could come away with this and just have a bunch of apartments that are cash flowing. Let's hope that is solved, because I think the only real potential pitfall here is investing too much in amenities and running like a cash flow negative business for too long, thinking that you're going to kind of, I don't know, take over the space. And I don't think that that's as possible in apartments. It's not this unclaimed frontier. It's already claimed by a lot of people.
Very, very true. And again, we mentioned this earlier, but I mean, they've already faced, cash crunches at their Nashville apartments, which it's not listed on their website, but Yield Street, according to a Real Deal article, dated back in January 2024, Yield Street opened a fund to raise essentially rescue capital for some flow properties, essentially to purchase additional rate caps as well as cash flow deficits.
Interesting.
And then again, there's another report that property sold below the price that they purchase it for. So again, already some hiccups, and for other companies that would have kind of started a venture in the space, already having like a failed project kind of in the first 2 years isn't a great start to things. And again, they mentioned 3,000 units, 4,000 units. I'm only seeing 3 locations. Where are all of these units? Yeah. And what did that $350 million buy? Maybe there's flows everywhere, but they're just hidden.
Oh, they're not cash flow positive as of May 15th, which is when that article that I was just reading from, the end of the article said, like, the Flow was recently, a spokesman for Flow recently was quoted by saying, "And we expect to be cash flow positive by the end of 2025. So not yet. They're not making money yet. And 2022, no money. 23, 24. 25. That's a lot. Like, if we had a syndication and the first 3 or 4 years were cash flow negative, I don't know if we'd be able to. I think that there'll be difficult calls with investors, but I think that venture capitalists maybe have a different idea. And
they don't look for that. They don't expect cash flow. If it's a growth business, again, I just don't know where the growth
exactly,
where that exponential curve above the rest of the market comes from.
Yeah.
And maybe they're talking about their operating business, which isn't necessarily a unique thing in real estate. But if they're talking about the real estate itself, then that is not a great start. And you'd like to see some cash flow just for the health of the deal itself.
Yep. Totally.
Well, Matt, let's move on to this TREP piece.
You can tell I love talking about this, though. I love talking about.
I know you do. It's interesting, and I think it's a good case study to continue to track. I really do, because again, I don't think they're. I think like Karl Marx, I mean, some of the observations weren't necessarily wrong. It's just some of the execution and kind of the concepts that's where it really falls short. So again, not horrible analysis of the situation itself, but
just identifies
got to pull the BS card on the execution.
Yeah, for sure.